So thank you, ladies and gentlemen, for joining us this evening for the Home Ownership Webinar Series. I am Catalina Edward Mons. I am the founding director for the Center for Educational Opportunity here at Albany State University. And I am so excited that you have taken the opportunity to join us this evening for tonight's series workshop. We've had several of these workshops throughout the semester, and we'll have some even into the month of June. And tonight's workshop is going to be an exciting one as we kind of explore this question of home ownership and the athlete. So let me give you a little bit of a background on this particular series. So Albany State University was funded with a 2-year grant from the Georgia Housing and Finance Authority through the Housing and Urban Development Comprehensive Housing Counseling Program. And it is a program that has been funded that has provided funding to several historically Black colleges. And the aim of this grant, it's a 2-year grant, is to be able to share information with the campus and the broader community on ways in which individuals can learn about the housing options. So this is a 2-year grant. When we started in the fall of 2023, 2022, 23, 23, 24, yes, we did a series focused on women, and it was fantastic. And joining us this evening is one of our consultants, a student who has graciously taken the opportunity to share out the webinars on the Albany State University YouTube channel. So while we may be short in numbers at any particular webinar, or we have lots of participants at the webinars, either way, the webinars are being recorded and will be shared more broadly with the Albany State University campus. So as you can see on the screen, there are several series. We've had the pleasure of working with Rashonda Muldrow, who did an amazing presentation in April on public housing versus private ownership, where she kind of delved into helping those persons living in public housing units, if you will, explore the option of private home ownership, which was fantastic. Tonight, we will hear from Dr. Milton Reese, who will conduct a webinar on home ownership and the male athlete. Why are we doing this? Because we know that athletes, both male and female, are really having opportunities to amass or come in contact with large sums of money, either in their collegiate experiences or certainly when they go professional. And we want to ensure that they have some understanding of the value add in becoming homeowners. And so Dr. Reese will share a bit about that. Now, I'm sad to report that Jennifer McReynolds, our presentation that was expected to happen tomorrow, will not happen. Our consultant was unable to engage because of a change in schedule. No worries. The thing the reason I say no worries is because I'm almost certain that a lot of the information that Dr. Reese will share tonight could certainly be applicable to our female athlete audience as well. And then finally, you'll see we'll have 2 more speakers, one later, May 14th. Miss Tanita McKnight will be presenting on what we call the unhoused. And the unhoused is really the politically correct term of homeless families and how they can utilize credit so that they too can find themselves into permanent or private home ownership. And then finally, well, in this series with Adrian Lance Lucas, who will do a presentation in early June on tiny houses. We know that tiny houses are something that's up and coming. There's some conversations around ways in which families can be private owned homeowners by not starting with gigantic debt and gigantic dwellings, but looking at small or tiny homes as well. And then I will stop with just this one notation you'll see at the very top. We are delighted while this grant has afforded us the chance to reach out to our campus and our community. One of the things that we've learned through doing this grant is that students have expressed interest in learning about becoming real estate agents. And wow, what an amazing outcome, if you will, of this grant. And so as a result, Rashonda Muldrow and myself, have been meeting with a group of interested students on the Albany State campus, and we have since submitted a proposal for the launch of a real estate club. So we'll have our fingers crossed that that will come to play. So I'm going to stop sharing. The QR codes are listed on the screen. Those of you who are here, you're welcome to take a screenshot. And those of you in the virtual space, we hope that you are able to join us in our future webinars. So I'm going to stop sharing. And without further ado, we will have Dr. Milton Reese to present this evening. Thank you again.
Hello, everyone. Thank you so much, Dr. Mons, for allowing me to participate with this grant that Albany State University has acquired. And I feel honored, actually, because I'm a proud member or alumni of Albany State University. Um, this presentation tonight will be about home ownership and the male athlete. Like Dr. Mons also said, we will talk in general about basic home ownership that can apply for male and female buyers. So it will be very beneficial to anyone who is in the space of buying a home at this point. So a little bit about myself before I get started. I do have about 6 years in real estate at this current moment. In July, it'll be my sixth anniversary of being a real estate agent, and also I'm an associate broker for the Real Estate Concierge, which is located here in Albany. Also, my full-time career is an educator, so I've been doing that about 15 years. So, like I said, I'm very excited to share this presentation with you. Feel free to drop any type of questions in the chat. We'll be able to answer those questions at the end of the presentation. So feel free. No question is too long or too short, or don't feel like it's a question that, oh, I don't really want to ask that question right now. You can go ahead and ask that question, because if I don't know the answer, I'll be sure to get back with you with an answer. All right. So, like I said, my name is Dr. Milton Reese. These are some of the expert presenters who Dr. Munns talked to you about earlier that have already presented or will present in the future. So during our presentation, these are some of the topics that we will discuss. The first one would be myths in real estate. As we know, there are certain things that people say, oh, don't buy a house when you're so young. Students can't buy houses, or young people can't buy houses or invest in real estate. They shouldn't be trying to worry about that. They need to go ahead and try to get their career started, or go ahead and finish college before they even think about starting a family or getting a home. So some myths that are in real estate, we'll talk about those. Nil deals, I'm sure several people have heard of the NIL or nil deals. And how does this relate to real estate? Or how can I use nil deals in order to help benefit myself if I'm trying to invest in the real estate market? We'll talk a little bit about that as well. Next, one key thing I talk to all of my clients about is credit. So majority of the people that come to me, they say, oh, Mr. Reese, I'm scared. Uh, And the reason why they're scared, because they don't either know what their credit is, they don't know if their credit is good enough to purchase a home. But I try to empower them and say, even if you can't get the house in the next 6 months, let's set up a plan. So we'll be talking about how to set up a plan if your credit is not where it needs to be up front. And I'll also give you the specific scores that most banks and most lenders require in order to be qualified for a home. Then on the search for a home, what does that search look like? What do I need? What do I need to know? Do I need some help? Usually, a real estate agent will be able to help you. And I do, being that I am a real estate agent, I always suggest that you go in with an expert in the field, not try to go with this alone. Because I know if we're talking about students are young, they feel like they can conquer the world. But sometimes we do need that guiding hand, especially in a market that we may or may not know a whole lot about. Then once you actually start searching for that home, this is the process. You must make an offer. And then after you make that offer and it's accepted, then you'll be able to go into closing. meaning the home is almost yours. So we'll talk a little bit about that as well. Follow that up by a question and answer session. So all of the questions that you put into the chat or that you actually raise your hand and ask, I'll be able to answer those questions at that time. All right, moving right on into it. Myths in real estate. So the first one, it's better to get pre-approved after you find the perfect home to buy. So this is one of the hugest myths that I want all of the participants to know, and people that aren't on the call and that will view this webinar. Please, please, please do yourself and your real estate agent a favor by getting your pre-approval letter first. That's going to be very, very important. You should get it before you begin your home search, and that's called your buying power. You won't know what your buying power is unless you go through and get the pre-approval first. I can go ahead and start looking for homes that are $400,000 or more. However, when I go to the bank and the lender say, well, I can only loan you $175,000. So you've wasted a whole lot of time putting into that $400,000 market where you could be focusing more on the 175 where you're approved. Or if you're still trying to get the 400,000, then you would know exactly what you need to do in order to reach that amount. So please, please, please try to get your pre-approval letter first. We'll talk a little bit more about the qualifications to get the pre-approval a little later. Also, when you're making that offer, the seller is going to be impressed because you have a pre-approval letter as well. They're going to be more apt to accept your offer because you have that pre-approval already. Some homes or some sellers won't even allow you to view the home if you don't show them a pre-approval letter first. And that kind of saves them time as well because a lot of people just like to go out on Sundays and browse around and go and visit homes. But sellers definitely want people who are ready and willing to make an offer to view their homes versus people that's just kind of browsing. All right, number two, always start with your lowest offer when buying a home. I always preface most conversations about home buying with pre-COVID or after COVID, with which we know we still kind of have COVID going on, but in the midst of COVID, that changed the whole real estate market. We used to try to negotiate deals much more when before COVID. However, when the market changed and many people lost their jobs, and in turn, a lot of houses went into foreclosure, and or there weren't many people wanting to sell their homes because of the fear of the unknown. They didn't know, what would my job be like in 10 years or 5 years or the next year. So we didn't really know. So everyone was kind of nervous about putting homes on the market, which started a bidding wars. So if you go in trying to put in the lowest offer and you have multiple people who are also putting in offers, then more than likely your offer will not get accepted. This is what's called a seller's market at this moment. So you don't want to start with your lowest offer. You want to put in a good offer from the beginning in the mindset of, I may not have time to go back and put in another offer, or the seller will not provide me with a counter offer. So that's very important. Number three, it's better to price your house on the high side when you're selling. So on the opposite side, if you're selling a home, um, maybe as a student, your parents left you a home or you inherited a home and you say, okay, this is the starter home that I have. Now I want to sell this starter home and purchase my dream home or my first piece of real estate. So when I'm purchasing that, I don't want to price it on the high side. I want to price it according to the market. So the market determines the value of the home. not some imaginary number, that we may come up with. You have to look at and see what the market is doing at the time, but you also want to price it to be competitive. However, you don't want the house to sit on the market for 6 months to a year just because it's not priced well. So that's going to be very important if you're on the selling side of real estate, making sure that if you're trying to sell that home, that you price it well. And again, a real estate agent will be able to assist you with that process. So don't try to go it alone. Several people will say, okay, I'm just going to sell my house myself. So those are called for sale by owners. However, if you are a normal person who don't have a background in real estate, more than likely you won't be as familiar with the market values and the rates and how to price the home correctly. So try to consult with a real estate agent on that. Number four, renovating your house will definitely net you more money than you will when you sell it. So it's very important. We have a person called an appraiser. So the appraiser is the person who will determine how much your house is actually worth. So if you're doing any type of renovations, going back to the scenario of if you were gifted or inherited a home as a student or a recent grad or just a person as old as me, then you want to make sure that I'm only making the renovations that are necessary and that would bring value to the home. Certain things do not bring value to the home. So just because it looks good, that doesn't mean that the next buyer will want that in their home. So usually, if they don't want it in a home or it does not create value, you don't want to do it. So again, if you have a good real estate agent, that person will be able to tell you specifically what to do before you sell the home, what's important, what's not important, because specific things make the price of the home go up. You don't want to do a whole lot of renovations just because these things look good. You want to do things that are going to increase the value of the home. Number five, it is safe to skip the home inspection if the house looks good. So this causes a whole lot of problems. So we'll talk about this a little more when we get further in the presentation, but this causes a lot of issues. Many lawsuits, many lawsuits are done because of a home inspection. Real estate agents are being sued, sellers are being sued, um, appraisers and inspectors are being sued, all because of a home inspection. So it's always best to get a home inspection. The key word, by a licensed home inspector, not your friend who he just paint houses. He don't have a license in the state of Georgia. You want to make sure that this person is licensed as a home inspector. So you definitely shouldn't skip that inspection because it may uncover some some problems that could really hurt you down the line. And I've seen all kind of things. So I could go on and on and on and tell you different things that we've uncovered during inspections. But just to be on the safe side, whenever you're trying to buy a home, always get a home inspection. Always get a home inspection done. So those are the top 5 myths in real estate that we want to make sure we are paying attention to when we go into that buying market. So you'll be well equipped with what you need to know. All right. So NIL deals in real estate. NIL deals in real estate. So I'm sure that most of you have heard of the NIL deals that student athletes are now being able to take advantage of. Um, and it's a really big deal over the last two years or so. A lot of laws have been signed into place so that these students can take advantage of um, money that they can get from different vendors, from different people or businesses that they are being sponsored by. just by using their name or their image or their likeness. That's what the Neil deal is all about. And we know that through professional athletes or professional organizations, athletes have always been able to do this, but now it's more important because student athletes are able to do it, and it's all the way down to high schools now. So not only college, but also high school students are able to take advantage, which, people are kind of 50-50 on this because they're saying, are we putting too much hype on these students too early? Or are the students really managing their funds or their money that they're getting from the Neil deals? Or we're just putting too much hype on them and they're really not performing when they actually go to college, or they're not making it to the major leagues because the only thing they were trying to do is get the money and do different things with. So another side to look at is using this money to invest in real estate, which I think is a very, very good idea. Using this money to invest in real estate is going to be very beneficial for um, student athletes. And even after you've left the school or whatever type of sport that you played, you still, if you invest the money, I say invest, 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 then you'll be able to really use the money to get things that you would need. We're gonna watch this quick video clip so we can get a little more information about the Neil deal. Then I'll tell you what my suggestions are. All right, let's see if it's gonna play here.
Dr. Reese, there's no sound.
She might be having internet connection problems.
Dr. Reese, if you could stop the video and we can drop the link in the chat.
Yes, I'll drop the link in the chat so you will be able to go back and view it.
I can find it if it's entitled UT Student Athletes.
Yes,
no
that's
worries.
it.
I will
All
find
right. Thank you, ma'am.
You can proceed.
Thank you. So, the possibilities are endless. One thing that you could do with the funds that you receive from those deals, you can become a landlord. And one thing that I've seen that a lot of college students and prior athletes are doing now is becoming landlords. They are purchasing multifamily units, which could be duplex, quadruplex, or a whole apartment building where they are leasing those units out to other college students or to regular tenants. But I think that's a really, really good idea where you'll have some passive income that you purchase this unit. Only thing you have to do is keep up with the maintenance. So becoming a landlord, you'll have your own business and you'll also be able to um, maintain that income, and you don't have to do much to it. Just making sure that the simple maintenance is done on the property, and then you'll become an instant landlord. Developing low income housing, that's something else that you could do with that real estate, that money from those deals. Developing low income housing. So it's a big push throughout, especially in Southwest Georgia, for the need of low income housing. So if you're into developing, if you went to school for engineering or architecture or something like that, I think putting this into play will be really, really good. We always want to buy land as well. So if you purchase land with that money, the possibilities are really endless. So purchasing land would be another option. And finally, something that I learned about that I didn't really even know that people could do. So part of an NIL deal, I've seen athletes who are able to get paid from real estate referrals. So what they do is partner with real estate companies. Usually it's the larger companies like your Keller Williams and things like that. And they partner with those companies just to get referrals. So if I see a up and coming athlete or someone who just got signed to the NFL or the NBA or whatever type of sports league, and that's the new face of this real estate brand, I may be kind of tempted to try to go and see what that company is all about. So I'm going to use my network of influence to bring more clients to that company, and then I'll get paid. So being a college or high school athlete definitely would have its perks in that aspect. You won't even have to do anything. You're just getting paid from who you know. So I sent 10 clients over to the real estate concierge, and the real estate concierge wrote me a check for referrals. So that's a new thing that's going on now as well. All right. So the next one is, but my credit. So we know that in order to purchase a home, we must have some type of credit, but a lot of people don't know, what does that credit score have to be? What do I really need to do in order to purchase that home? Does my credit score need to be 800? Back in the day, I think a lot of people felt as if my credit score had to be some really, really large number at the top, the max credit score that you can get. But that's definitely not true. The key is, though, that students should start budgeting in college, or actually even before college. So we want to make sure that we're budgeting and making sure our credit is up to par early. We want to do that early. I know we're tempted. That's why I put a credit card up here, because it reminds me of my college years where I did get two credit cards, and those two credit cards messed up my credit. Or I should say, I messed up my credit because I wasn't responsible enough with those credit cards. But once I learned the value of credit and how important it was, especially when I'm trying to buy a home, that I need to make sure I'm more responsible. I need to make sure I'm doing what I'm supposed to do in order, as far as paying my credit cards or all of my bills and things like that on time. The first thing we want to do is save for a down payment. We want to save for a down payment. So, one good thing, if you're a college student, sometimes you may get a refund check. So, if you get a refund check, um, you want to save that refund check. Save that refund check, put it into a bank account, and if you're on the journey of buying a home, you'll have that money already. Down payments aren't as much as we may think they are. Also, we don't want to take out too many student loans if we don't have to do so. I know that was one of the other things that me personally I had to do. And if I put in a different situation, I wouldn't have done that. Because student loans can prevent you, or well, I won't say prevent, that's a strong word. I'll say hold you up from purchasing the home that you would want, because that is still a debt, and it does go into your debt to income ratio, what the lenders look at, and they call that DTI. You also want to develop a budget. So, like I said, start budgeting early. If I know that I make a certain amount per week, I need to start saving a certain amount per week or every pay period whenever I get paid. So once I start saving that, I'll be able to set a realistic goal, and like I said, have a bank account there so that I can really keep up with the amount of money that I'm saving. So this is the one that I think most people would want to know. What does the credit score have to be? So that's a kind of a loaded question. So it depends on the lender, and it also depends on your individual credit profile. However, a good number that I always try to tell my clients is 640. So if I have 640 across the board on all three credit reports, then I should be good to go. However, like I said, that DTI, debt to credit, ratio, debt to income ratio, sorry, I need to make sure that that's not too high. The lender will tell you what that ratio is. Some have 40%, some say 45, some may say 47, some may go to 49. So whatever that is, however much you make compared to how many bills you actually have to pay each month is makes up your DTI. So the DTI, along with your credit score, will determine if you're able to qualify for a home loan. And if you are, it'll also determine how much you can qualify for. So those things all work together. So your DTI along with your credit score. Very important. So 640. However, I have seen lenders that will go down to a 620. And then if you're really, really desperate and in need of trying to buy a home, you can actually probably get one all the way down to a 580. And with the 580, um, just be prepared for higher interest rates. So it's like everything that if it's not up to par, you're going to pay a higher amount. So I would rather stay on that 640 end because I could get a better interest rate and higher chances of pre-approval versus having a 580. So if you're not in that range or those ranges, then you want to seek to repair your credit. I don't refer any specific credit repair companies or anything like that. However, I do suggest that you look at your own credit report line by line to make sure, things are on there, actually belong to you, and that they are actually reported correctly. And then if any things are outdated that you've already paid, you want to get those things corrected because simple errors on people's credit report can give them, that boost that they may need. Um, so the other thing they look at is your time on your job. So they want to make sure that you are working. They're going to definitely verify that you are working. The preference is at least 2 consecutive years on your job. However, I have seen some lenders where they are accepting at least 1 year on your job. And they want you to have a reasonable income. So a lot of clients say, well, how much do I have to make? Again, that's a loaded question. I can't tell you how much you should make. However, once they put all the numbers together, they'll say, okay, according to how much you make compared to your debt income ratio and your credit score, this is how much you can afford. And one thing about the lender, they're not going to give you more loan than you can actually afford. So that's a good thing. Because sometimes we want that $500,000 house and we're just graduating or just getting our career started and we can't really afford that yet. So, but the lender will not give you more than what you can afford. All right, so now the home search starts. So we're now ready to start looking for an actual home. What does that entail? When we are searching for a home, we want to make sure that we go out and make a good offer. If we have a good real estate agent, the real estate agent will guide us in that whole process. So once you're making the offer, you're gonna go out and search the homes. Usually what I do is send my client an app and they're able to identify specific homes that they are liking or they want to view. So once they send me those links, I'm able to look at the house and go back to our previous conversation to see if it aligns with what they said that they really want. Because sometimes if they see the house online, those pictures can be exactly what they wanted, or it can be totally against what they say they wanted. So sometimes the pictures can deceive you, or I have more access to different notes and things like that under the listing in order to kind of tell the client if this house is going to be suitable for them or not. So then I'll go and say, okay, we're able to go and view this home. And then we'll go and view the home and we're ready to make an offer. We always want to make a good offer the first time because remember what I said, this is still a competitive market. Even though COVID is over and the market is getting a little better, it's still very competitive because there aren't that many homes for sale on the market. So we have to make a good offer from the beginning. So some terms that you'll hear when you're making an offer and going into closing are here. So I'll go over those quickly. First, we have the purchase price. So the purchase price is going to be the number that's on the top. That's the number that the seller is trying to get from any potential buyer. However, that may not end up being the actual contract price because throughout that time, there will be some negotiating going on. There'll be an inspection going on. Once you get that inspection, you may come back to the table and say, okay, we found 10 things wrong that need to be repaired before we move forward with this contract. The seller may say, okay, well, instead of me doing those repairs, I'll take $10,000 off of the sales price. And if both you guys are in agreement, you'll sign an amendment. Once you sign that amendment, then the sales price will go down by $10,000. So the purchase price may be one thing, but this price at the end may be something lower. Usually it'll never be higher, but it could be lower. And of course, lower sounds great to the buyer, not to the seller. So next we have included items. So all of this will be included in your contract. You want to know specifically what's included with this purchase. So you'll get a document called the seller's disclosure. So on the seller's disclosure, it's going to highlight specifically all of the items that's going to stay with the property. And it's going to highlight all the items that are going to leave with the seller. So usually the seller usually leaves, if they were living there, they would usually leave most of the appliances, specifically the ones in the kitchen. So they usually leave the refrigerator and the stove, microwave, um, dishwasher. So it says what is included with this purchase: refrigerator, washer and dryer, pool, storage shed, etc. So like I said, all of those things will be highlighted on the document, and both the seller and the buyer will sign off saying that they understand the things that are staying with the property as well as the things that will leave with the seller. Excluded items. What is excluded with this purchase? Same thing. What are the things that the seller is taking with them? Are they taking the refrigerator? Are they taking the stove? Am I leaving the microwave? Sometimes they take the mailbox with them. So that's very, very important to look at. Whenever you get that contract, make sure you see what items are included in the sale and which items are excluded in the sale. All right, so earnest money. So we've looked at the home, we've made an offer. What binds the contract is called the earnest money. So the earnest money is the initial deposit. There has to be some type of exchange of funds in order for the contract to be valid. So once I say, I'm going to give you $1,000 in order to bind this contract, that's called the earnest money. So with the earnest money, it actually counts towards the actual closing costs. So at the end, at closing, if you paid $1,000, that $1,000 will actually be deducted from your total amount that you have to pay. So it's kind of like you're just loaning them that money or saying, hold this money until we close. This is my guarantee that we're going to try to make this deal go through. However, if the deal does not go through, then the seller, if it's no fault of the seller and it's at the fault of the buyer, then that earnest money could go back to the seller. or the seller could keep the money. So it's kind of like for my pain and suffering. I've kept my home off the market for 2 months and you still wasn't able to close. So now you owe me this earnest money. So that's how it works. Okay, closing costs. These are the fees and charges in excess of the purchase due at the closing of a real estate transaction, which may include fees related to the origination, underwriting, the loan, taxes, insurance, premiums, title, and record filings. I'm sorry. So with that, those closing costs belong to the buyer. However, pre-COVID, the seller would usually always take care of those closing costs. Like I said, we're in a very competitive market right now. So most of the time, the seller will not take care of those costs. So in addition to whatever your down payment is, you may have to pay those closing costs as well. So it's going to be very important that you have a good realtor and lender who's going to explain this to you up front so that you can know specifically the amount of money that you would need in order to close the deal successfully. You don't want any unexpected expenses to come up at the end. You say, oh, I was under impression that the seller was taking care of all the closing costs. I'll just have to pay my down payment. So make sure you understand that upfront. Usually we try to ask the seller to pay some, if not all or half, of the closing costs when we make our first offer. So all of that goes back to making the first offer, which has to be a good offer because you may not get another opportunity to come back and say, oh, let me make another offer. Due diligence contingency. So this is an opportunity for you to receive and review facts and conditions of the property before moving forward in the transaction. So the due diligence, meaning I'm going to do all of my work, background, try to figure out everything I need to figure out about this property before I go to closing. So usually in the first offer, your agent will say, okay, we have a 10 to 15-day due diligence period. So during that 15 days, we're going to get all types of inspections done. We're going to look at the property a second and third time. We're going to make sure the outside is good. We're going to make sure the septic is good. We're going to make sure all of these things are good to go before we move forward with this deal. So that's called the due diligence period. So during the due diligence, if you back out of the deal during the due diligence time, you actually will be able to get your earnest money back. However, if you back out after the due diligence period for any reason, you will not be able to get it back. So that's what I was talking about the money will be able to go back to the seller. So you want to make sure you get all of your inspections done to make sure the property is to your liking. And then you can just change your mind for no reason. Like you just, well, I thought I loved this home, but I rode back by the house at night and I didn't like how it looked. So for any reason during the due diligence period, you can back out of that home. Appraisal condition. Will the sale be contingent on the home's appraisal amount? So most lenders require an appraisal contingency as well. So all properties that are financed by a bank or lender, they have to have an appraisal in order to verify that the amount that you're trying to purchase the home for is actually that amount. So for instance, if the house is being purchased for $200,000 and the appraiser comes and say that the house is worth $200,000, you're good to go. However, if they say it's anything less than 200,000, then there's an issue. So you want to put that appraisal contingency in your offer so that if the house comes up less than that amount, that sales price, then I'll be able to either go back to the seller and renegotiate, or I'll be able to leave the deal and be able to get my earnest money back. So that's part of making a good offer in the beginning as well. Home warranty. Another thing, pre-COVID, once again, we used to always try to include a home warranty in the offer so that the seller can pay for a home warranty um, in case the buyer have any issues within the first year. And usually the buyer um, will continue on that service for years to come if they like the service or if they decide to. So that's always something good to try to put in the offer. And even if if they don't accept it and don't put it in the offer, then you as a buyer can go outside and get it yourself. And I do always recommend getting the home warranty because within the first year, your air conditioning unit can go out. And then you call your home warranty company, and then they will come out and either replace it or repair it. So I do find that there is quality in the home warranty as well. Financing contingency. Will the sale be contingent on you securing financing? So most sellers do not like a financing contingency like this. This goes back to getting the pre-approval first. So they want you to already have the pre-approval. So finance contingency, most sellers don't like to accept deals with those type of contingencies. All right, the last one is our closing date. What should the deadline date be for all parties to complete closing? Usually that's determined by the lender. A rule of thumb is about 30 days. Sometimes the lenders are able to get it done a couple of days before the end. Sometimes it'd be a little bit after. So I'll say 30 to 45 days is a good date to determine your closing date because several things behind the scenes have to be done. Several days have to be allotted for different things, kind of like the things that we discussed, in order for closing to be approved. So, and then you want to make sure that you have enough time because you really don't want to rush anything either. Clients ask all the time, well, how quick can I move? Especially if they are under a lease or um, someone who really needs to move out quickly out of wherever they were. They always ask, how soon can we close? How soon can we close? And that always is determined by the lender if you have a lender. But if you have cash, like we're going back to those NIL deals, if you're purchasing these properties cash, you can close within 1 week. So that's another good way to look at it. If you're purchasing using cash, you can have a quick closing date. And sellers love quick closing dates. Lenders, I'm sorry, and the attorney love quick closing dates because it's less paperwork and everybody gets paid quickly. So everybody loves a quick closing date.
So, Dr. Reese, I'm going to hop in because we're now at 6:52. We have 7 minutes remaining in this evening's presentation, and there are some questions that have come up. So if we could take a moment to maybe review some of the questions so that we can hear from our participants if there are any that have been dropped in the chat or any that will come from the floor. Is that feasible?
Yes, I see one here.
Okay.
Students are told by credit card companies that they need credit cards to build their credit. Oh, is this one that you put in?
I put in several. So yeah,
Okay, gotcha.
go for it. Go for it.
All right. So, this is I can say yes and no. So it depends. So credit cards for some people will give them the boost or the head start that they need if they have zero credit. So that would be something good. But the key is making sure that you don't max those credit cards out. So most time the rule of thumb is keeping it under like 30%. So if you keep it under 30% and you use it constantly and you get a higher and higher balance, then that definitely can help build your credit. Making sure you're paying it on time. But as soon as you don't pay it on time, then that destroys everything that you worked for. So that's very, very important. Paying it on time and using it correctly.
Great, thank you. Another question in the chat, should student athletes purchase homes in their names or their parents' names?
Definitely, they should purchase them in their names. So you want to, if you're trying to build your own wealth, they should definitely purchase them in their own names.
Great. So you've shared a lot of information with us over the last 50 minutes. And another question is, based on all of the information that you shared, what are some of the top 3 things that a student athlete should do right now to prepare to purchase a home?
Making sure that they have a budget and saving, making sure they have a budget, and reaching out to a realtor to help guide them.
Excellent. Thank you. Another question in the chat is, oftentimes athletes, when they want to purchase their first home, they want the biggest home in the market. They go out and they buy these really large celebrity style homes because in their mind, they're thinking this is a house that'll last forever. Thank you for that. So, should they be looking at larger homes, smaller homes, or should they consider things like safety? Should they be living in gated communities, particularly if they have large contracts?
If they have large contracts, I definitely suggest gated communities. I definitely also suggest investing. So when you're investing, you don't want to always get big, nice homes. You want to get things that you can actually fix up and make a profit on it quickly, whether you're going to try to sell it or rent it. But and Airbnb is very, very popular now as well. So you definitely want to get properties that may be distressed. That way you can turn a quicker profit.
Great observation. There is a question regarding students. So the students who are on the line and the students who'll be watching this video later, they may say, wow, that's a lot of information. Where can I learn more about real estate while in college? And so one of the options, young adults, is if, I'm saying if, Albany State is approved to have a real estate club. That's one way to learn more. But in addition, Dr. Reese, are there other ways that students can learn about real estate while they are still in college outside of these amazing webinars that we are hosting?
Yes, it is. Definitely the city of Albany definitely hosts different events like similar to this all the time as well. So if you I can give you the person's contact. I'm sure you have it as well, but they do have things monthly or quite often in order for people to learn more about real estate, as well as just talking to different agents. Because each company, one thing that we try to do with the Albany Board of Realtors is give back. So, in that effort to give back, we do a lot as far as hosting classes, seminars. Also, my company in particular, we actually assist students in test prep. So if you want to become a real estate agent, we actually provide test prep free of charge. And we actually walk you through, talk to you through those difficult questions and all of that. So you have various resources out here. Just reach out to some people.
And the last question of the evening comes from Bray. How does the 2-year work history work with students, if you can clarify?
Okay, good. That's a great question. And I just had last year a student who graduated from Fort Valley State University, and she, even though we're talking about males, but she did not have that 2-year work history. However, if you have a contract from your job for 1 year, a 1-year contract at least from your job, that satisfies that 2-year requirement. So lenders will take now your job offer and or a 1 to 2 year contract in lieu of the 1 to 2 years on your job. So you can be fresh out of college and still qualify.
Thank you. So, Dr. Reese, we'd like to thank you for your time, for your wisdom, and certainly for sharing your knowledge with our campus and community audience. At this time, I would like for you to go to the very beginning slide. There is a QR code on the very first slide. And ladies and gentlemen, if you could take the time to scan that QR code, it should take you to an evaluation, unless, Dr. Reese, You have the QR code on the very last slide.
Yes.
Yes, if
Yes,
you
I do. I do have it on the last slide here. I'll
thank
go to
you.
it now.
Thank you. So audience, if you would kindly take a moment to pull up that QR code, it should take you to a form that will allow you to evaluate Dr. Reese's presentation. There's going to be a drop down because we've hosted a ton of events, and just scroll down and you should see or find the event from this evening, which, as you know, is April 30th, home ownership and the male athlete. Dr. Milton Reese, we appreciate you and thank you for your time. And if you have any closing remarks, the floor is yours. And again, thank you.
No, I don't have any closing remarks, but if you guys have any additional questions or are actually in the market to purchase a home, I'm also available. And the survey is here. So I do appreciate your time and the opportunity to provide this type of information. This is what we do. So it was great. Thank you, Dr. Mons.
Thank you and have a good evening. Bye
You
now.
as well.